Folks, I don't know if we've done this in quite a while. We need to talk about the yellow metal, and we should also talk about Bitcoin. We're going to talk with Taylor from Life Goal Investments and figure out what is going on. The gold market, 25.50 an ounce, and we've got Bitcoin hovering around 59,000. So Taylor, what's going on?
Yeah, I thought these two were supposed to trade right on top of each other. Gold and the new digital gold, right? We're getting a little dislocation here. What the heck's going on?
Yes, yes, yes.
Yeah. So I think as I see this, right, gold is a unique asset in the fact that it typically works. If you look at the economic cycle and put it into four segments, being growth, inflation, stagflation, high inflation, low growth, and then weak growth or recession. Gold actually works in three of the four of them,
Hmm.
right? So it serves as a nice inflationary hedge because it's not part of a fiat currency, et cetera. It works during stagflation because you have inflation and the fear trade of a weakening economy, and it also works in a recession.
Hmm.
Now, crypto on the other side, at least the way it's advertised, is an inflationary hedge. It's a recession. I don't know what it is, but I will say that people call it the digital gold.
They
I
do?
think what you're getting is the dislocation right now. And I think it's not that gold is responding to an inflationary fear. I think
Hmm.
it's gold responding to a recessionary fear. And that is where gold will react one way, which it's hitting
Yeah.
all-time highs,
Yeah.
and crypto will react the other way on economic weakness. Now, I think crypto bulls will tell the other story in the fact that, hey, recession, it's outside, it's different, it's this, it's that. That's not what we're seeing right now. And I do think there's a few other reasons that we could talk about, but that's my broad sense of what's going on with crypto and gold right now.
Yeah. Again, I don't follow gold at all, and Bitcoin only slightly more. I really don't follow either. It does feel like something changed in the gold market this year. I don't know whether it's the interest or inflows. I don't know the recession, or it's just the fear that we're going to turn back on the money printers. It does feel like more and more people are like, I think it's basically I want out of fiat currency. And I'm gonna go take a percentage of my liquidity, call it, 1, 5, 10% something, and I'm gonna stick it in something else. And again, I think the crypto folks would say that that's happening in crypto. I'm sure it is, but I think gold was ignored for decades. And I think what we're seeing is maybe some of the old hats come back in and go, "Hey, world's getting weird, man.
Yeah.
I need some of this, ultra store of, wealth that, goes back hundreds of years." It just feels like something changed. I mean, Peter Schiff, he's been pushing the gold thing for a long time. You got to give him credit right now. It's kind of been right the last, I don't know, 6, 12 months.
Yeah, and I think there's also an opportunity cost trade playing out right now where when you see bond yields compress, then the fear or the risk off trade where, hey, I could buy
Yeah.
a bond that just went from a 4.5% yield to a 4% yield or just under 4% yield being a US Treasury, or the opportunity cost is I could buy gold on the other side. When bonds are yielding 5,
Right.
I like that trade. When bonds are yielding sub 4, I don't like that trade anymore. I'd rather go over here to gold on the other side as being that kind of store of value in a recessionary time.
And one of the things I've learned from you in life goal investments is this is why you're kind of unique, right? You have a stock play, a bond play, and I'll call it a commodities play where gold plays a big diversification.
Yeah.
And as I've been watching gold run, I'm like, damn, that Taylor guy's pretty good.
Yeah.
Because you've been exposed to that for a while.
Yeah, so it's not just gold, right? So that's the commodity side of things, but it's also things like farmland. It's things like right now we really like infrastructure debt. Infrastructure debt right now is a place where it's almost a back end way to pay AI. So you think
So,
about
so you
AI,
data. So just so we clear what infrastructure, it's not roads, freeways, and railways. This is data center stuff, or what is it?
it's all the above, right? So
Oh, all the above.
it's the
Okay.
traditional stuff where it's the Port of Los Angeles. It is also roadways, bridges, tunnels, but now a bigger and bigger component of this is data storage because it's
Hmm.
critical infrastructure to the US. We have to be able to move technological pieces around from one place to another, and it's this mega build out of these data storage facilities. I don't have anyone that's telling me right now I think data is going to be less used in the future.
No, no,
And the
it's gonna
government
be.
knows that, and therefore they're building out more and more, and it's a public-private partnership. So right now, you can buy
Hmm.
infrastructure debt. Here's some shocking stats.
Okay.
Infrastructure debt right now yielding almost 11, 10 9
No. Really?
10.9%.
Wow.
Here's the best part about this. The default rate over the past 40 years in the infrastructure debt space, 1.2%. So you look at 1.2% defaults, it essentially very, very, very infrequently defaults. Non-financial corporates on the same statistic default at 14%.
Oh, there you go. There's scale. Okay, got it.
So that's 1.2, 14% on the other side, and they yield 10.9. So like it's an amazing opportunity out there, but it's a back end way of playing AI. Is this, and data storage as it builds out. The other great thing is they have inflation kickers on the contracts.
Oh
So
my
if inflation
goodness, really?
kicks up, boom, all of a sudden you have that on the back end as well. But yeah, I think it's a combination of listen, you need something in your portfolio that's going to do well when the economy's growing.
Mhm.
Okay. Stocks, check. You need something that's going to do well in a recessionary time. Okay. That's bonds. Gold might fit in that category pretty well. And then you need something that's going to do well during an inflationary time frame like 2022. And some of the alternatives really pretend that very, very well. So it's the combination of three legs on a stool. And then what you do over time is you adjust the portfolio. Okay, we go into recession. What happens? Your stocks might sell off. Your bonds are going to rally into the side. Sell from a position of strength in bonds to buy stocks. Okay, you sit in cash instead. What does cash do during a recession? It doesn't do anything. It treads water. To buy
Yeah.
the dip, that doesn't work. I want the bonds to have appreciated to sell from a position of strength. Anyway, I'll get off my high horse on that side. Um, that's how portfolio construction works, though, and it has to be clearly defined. There can't be, hey, I feel. No, there's
Mhm.
got to be a system in place, and if you
I
can't
love that.
articulate your system, then you're not in the right game.
Well, that's why you're
Crypto.
here. Life goal investments. You've been doing this for a long time and leading the way. So thank you for the education.
Yeah, thanks. I do want to talk about crypto real quick
Mm.
because I hear a lot and see a lot of headlines. And this is my bear crypto story, by the way. And I'm not a crypto bear. I've owned it in the past. I don't own it now. I don't see what pushes crypto further right now. So
Well, let me ask
why
about
not?
that. So let me ask about that because I've been seeing reports about BlackRock and Fidelity and all of these institutions still stacking Bitcoin, right? Still taking it off the market for their ETFs. I think that's called inflows. Is that not happening or what's going on?
Yeah, and what's done? What's it done? in March, Bitcoin was at 74,000. Now
Yep.
it's at 59, right? So you've had more than just that. That's been a catalyst for a tailwind. So you've had Bitcoin halving,
Hmm.
right? So now the people that are bringing new Bitcoin to market get paid half as much to bring each Bitcoin to market.
Yep.
That constrains supply. If you
Hmm.
constrain supply, prices are supposed to go higher. And historically, it has for Bitcoin. Second thing is you've had not 100 billion, but darn near 100 billion spill in via ETFs.
Hmm.
Third thing is they all wanted lower interest rates. The market's now pricing lower interest rates. And the fourth thing is Trump pounded the table
Yeah.
on Bitcoin,
Yeah, he
pounded
did.
it. Right. So if you have those four things, and now granted, Trump was a little bit more of an odds on favorite when he was doing it. So it really moved Bitcoin higher for a short period of time before selling off again. But right now, you sit at 74,000 in March. We sit at 59,000 on a Bitcoin right now.
Hmm.
What is the catalyst for that squeeze to push it to 100,000 everyone's talking about? I just don't know what that is. And that, therefore, in an asset that's not a producing asset,
Hmm.
I don't know. It's all speculation. And the narrative behind it, all four legs of the stool are fully in
Yeah.
place and priced in.
Yeah. So let me ask you a question about this because again, you deal with the ultra wealthy. And I think for generations, gold, silver, platinum, they've always been a part of portfolios, probably single digits for most people, but maybe slightly bigger for some who are scared or whatnot. Um, is crypto, and again, we'll just talk about the two big ones, Bitcoin and Ethereum,
Yep.
forgetting all the altcoin and trash.
Yep.
Have you seen more and more ultra wealthy ask about it, talk about it, think about putting
Absolutely.
1%? Okay.
Absolutely. Yeah. So it's coming up more and more frequently. And when it was at 74,000, it came up more frequently than it comes up now. Shocker there.
That's
Um,
very true.
but no, I think they
Oh
absolutely
man.
are. But I think that it's different. So the way you frame that, I don't necessarily think it's how people think about it.
Okay.
Meaning it's not the defensive aspect of it or the
Oh.
potential fear that could be the reason to buy it. It's more of the, hey, if I want to put 2% and take an absolute home run cut at something,
Okay.
What
So
is
they're
it? And
playing the
then
flyer. Got it. Okay.
yeah, that's where it is. And in reality, like outside of you know, outside of just recently, like the correlation between Bitcoin and tech stocks has been
Yeah.
lockstep.
Nearly one. Yeah.
Yeah,
Correlation of
it's been
one. Yeah.
lockstep. Right. And
Yeah.
that the narrative of the Bitcoin lovers is that it acts differently, but it certainly has not acted differently. The worst year ever, that might not be fair. One of the worst year ever for Bitcoin was 2022. What was the
Mm.
problem in 2022? Inflation. What was Bitcoin down? 62 or 68%, somewhere in that ballpark. So
Mm.
is it the inflationary hedge? I don't think so. I think it's the ultimate risk on appetite or risk off appetite when it goes down.
I think that's interesting because there will be a time where risk goes on again. It may be a while, but
I'd argue that
yeah.
risk has been on all year.
That's
The
probably
S&P
true.
500, the S&P 500 is up 14%, you know, two-thirds of the way through
It
the
was
year.
off 2 Mondays ago, but it's
Yeah,
back.
yeah, exactly. It was off for 45 minutes.
Yeah, I couldn't believe it. The
um,
S&P was down 1,000 points.
yeah. Now we're
Sometime around
2%,
11 Monday. Yeah, it's
2%
crazy.
off the all-time high. So it's, I mean, we're at all-time highs for all
So
intents and
how the
purposes.
hell can the Fed cut back to an earlier conversation? I mean, seriously.
What did we also say? The Fed doesn't care about the
Care
markets.
about the stock market? Yeah, you're right. All right. Touche. Touche.
No, but I don't necessarily agree with that. I do think that the Fed, just because it plays in the psyche of everything, that it's
Yeah,
not one of their things on their criteria, but it's definitely in the back of their head.
it has to be. It has to be. Taylor, where can people find you?
Yeah, find us at Life Goal Investments on Instagram and on TikTok.
Thank you, buddy.